Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Argentina's oilseed crushers have struck a deal with the government to hold down domestic edible oil prices in a potential salve to tensions after the country's president threatened to increase food export taxes to contain inflation. The Kira oilseed crushers chamber on Monday said the agreement on sunflower oil and sunflower soy oil mix would help ease government concerns about inflation, which a central bank poll recently forecast would be about 50% this year. The chamber, which represents crushers that drive the country's huge processed soy export sector, gave no details on the pricing pact.
India will be the main driver of rising demand for energy over the next 2 decades, accounting for 25% of global growth, and is set to overtake the European Union as the world's third biggest energy consumer by 2030, the International Energy Agency (IEA) said. India's energy consumption is expected to nearly double as the nation's gross domestic product expands to an estimated $8.6 trillion by 2040 under its current national policy scenario, the IEA said in its India Energy Outlook 2021 released on Tuesday. This is underpinned by a rate of GDP growth that adds the equivalent of another Japan to the world economy by 2040, said the IEA, the energy agency and policy advisor for members of the Organization for Economic Cooperation and Development.
Moving on to the top news in the energy sector.
The U.S. Energy Information Administration on Tuesday cut its 2021 world oil demand growth forecast by 180,000 barrels per day to 5.38 million barrels of oil per day. In its monthly forecast, the agency raised its oil demand growth estimate for 2022 by 190,000 barrels of oil per day to 3.50 million barrels of oil per day.
State-owned oil companies could squander about $400 billion on investments in the next decade on new oil projects that will struggle to turn a profit as the world shifts away from fossil fuels, a non-governmental organization said on Tuesday. The Natural Resource Governance Institute, NRGI, estimated national oil companies, or NOCs, would invest $1.9 trillion in the next 10 years, with about a fifth of those investments only breaking even if oil prices stay above $40 a barrel. Oil prices have climbed to around $60 this week, after plunging below $20 last year when demand plummeted due to the coronavirus crisis. But the long-term outlook is weakening, as more analysts and energy firms see peak oil demand being reached sooner than the previous forecasts of the early 2030s.
Next, we have the top news in metal markets.
Iron ore futures extended gains on Tuesday as concerns over tight market liquidity in China eased, with prices further bolstered by a positive demand outlook for the steel-making ingredient in the world's top steel producer. The most traded May iron ore on China's Dalian Commodity Exchange rose 4.3% to 1,061 yuan and 50 fen, $164.59, a ton by the end of daytime trading, rising for a fourth straight session. March iron ore on the Singapore Exchange climbed 2.6% to $158.65 a ton by 07:05 g.m.
Copper hit a one-month high on Tuesday due to a weaker dollar, optimism over a $1.9 trillion stimulus package and tight supplies of the metal. 3-month copper on the London Metal Exchange (LME) added 1.6% to trade at $8,163 per ton by 1700 GMT. This was its highest since January 8 when it hit its strongest level since 2013 at $8,238. It's a macro-driven story for copper at the moment. Market participants are euphoric and equities are at record highs, pushing commodities up, said Daniel Briesman, an analyst at Commerzbank, adding that the weaker dollar was another tailwind for copper. We will now look at the top news in the agricultural sector. India's edible oil consumption is expected to contract for the second straight year in 2020-21 as a rally in vegetable oil prices to multi-year highs curbs retail buying, industry officials told Reuters. Lower demand in India, the world's biggest importer of vegetable oils, could limit a rally in benchmark Malaysian palm oil prices, which are trading near their highest level in a decade. Lower demand could also weigh on U.S. soy oil and sunflower oil.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.